Welcome to Primary Markets TV, your insight into newly issued securities across the fixed income and equity space. I'm Ruth Emery. Joining me today is Jonathan Price, a visiting lecturer at the London School of Business and Finance, and we're going to be talking about IPOs and SPACs. The craze for SPACs might have dwindled a bit recently, but there's still plenty to discuss, not least with UK rule changes on the horizon. Jonathan, welcome to the show.
Good morning, Ruth.
What's the difference between SPACs and IPOs in terms of governance from an investor point of view?
When a cash shell, so a company with money but no other business, plans to take over a private business, so in other words, the de-SPAC transaction, that involves the suspension of the SPAC shares and the issuing of documents which are basically the same as an IPO. So in the UK, under the current rules, there isn't a huge amount of difference, although, to be fair, people do sometimes invest money in cash shells when there is a celebrity name, investor name attached to it. So that element's a bit different, I suppose. The big difference is in the US, because in the US, market practice has been in a de-SPAC transaction to include a lot of forward-looking information in effectively the prospectus that wouldn't have been allowed in a traditional IPO documentation. That makes it quite different. And of course, the shares are not suspended in the US. So again, that's a big difference.
And what are the advantages of investing via a SPAC compared to an IPO?
It's difficult to see any real advantages from the investor point of view, except perhaps for short-term trading purposes, because if there is a SPAC being launched by a big name investor, Altman or somebody like that, or indeed a big name celebrity. I mean, the famous one recently has been Shaquille O'Neal, the basketball player. If you can get in at the early stages, you have a good chance of being able to flip your shares at a profit quite quickly. But fundamentally, in the longer term, there isn't really much of an advantage, and you are putting a lot of faith in whoever it is sponsoring the SPAC. You're buying a pig in the poke, really, because you're putting your money into something and you've no idea where that money is going to end up. So you are putting a lot of trust in the sponsor of the deal. And of course, sometimes that works and sometimes it doesn't work so well.
What's your view on the UK proposals to relax the suspension rules around SPACs? Do you think that will be good for investors?
Well, I think it would be good for the market, because our rules are a little bit out of date. And as with so many things in the capital markets, we tend to follow where the Americans lead. And their enthusiasm for SPACs and the amount of transactions that have taken place are really good for the financial institutions. I can see why the Chancellor here would want to relax the rules, because, that looks really sexy and attractive. We'd like a bit of that, please. So it's good for the market as a whole and good for liquidity. And so in that sense, I suppose it is good for investors, although it's mainly the institutions that would benefit. I'm a little bit negative about SPACs and cash shells for retail investors, because really retail investors, they don't have the inside track. They're not so plugged into what's really happening, and they are making a leap of blind faith.
2020 was a record year for SPAC listings in the US in terms of cash raised, a record that's already been beaten this year. Are you worried about the SPAC trend? Do you think it's a bubble?
Yeah, I think it's clearly a bubble, similar to other bubbles we've seen in recent times. And it's just caused by too much cash looking for somewhere to go, looking for an interesting home. The yields are so low on fixed income securities. People are tending towards equity and equity-linked instruments, and there just aren't enough of them. So the market is very toppy as a whole, and this bit of it is particularly frivolous.
Mm-hmm. And what's the future of the IPO market when you consider what's happening with SPACs and also in light of recent IPO disasters like Deliveroo?
Yeah, Deliveroo and more recently AlphaWave. They've had some failed IPOs in America too. 3 or 4 of them recently are down 30 to 40% from their IPO price. So it's not just here. But I don't think the IPO market is dead. I mean, markets come and go, which is why the role of the investment bank is so important, to tell the issuer, now's a good time to launch, because sometimes the market's closed and there's nothing you can do about it. But it'll come back. So I don't think the IPO is dead. I don't think SPACs are going to replace IPOs. I think the one big danger is the rise of private equity.
Okay.
I think that's much more threatening to IPOs than SPACs are. SPACs, I think, they'll come and go as well, but they don't threaten the IPO.
Thank you so much for joining me today, Jonathan.
You're most welcome, Ruth. Thank you for having me.